Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is April 22nd, 2025, and we're diving into the first quarter earnings report of Bank of Hawaii. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Bank of Hawaii has just released their Q1 2025 financial results, and there's a lot to unpack, from their earnings per share to their strategic initiatives.
Revenue and profitability overview. Let's start with the top line. Bank of Hawaii reported a net income of $44.0 million for the first quarter of 2025. John, how does this compare to previous quarters?
Bank of Hawaii's net income increased by 12.3% from the previous quarter and 20.9% from the same period last year. This growth is driven by a strong net interest income of $125.8 million, which is up 4.7% from the last quarter. Their net interest margin also improved to 2.32%, indicating effective management of interest-bearing deposits and asset yields.
EPS performance and analyst expectations. Bank of Hawaii reported an adjusted EPS of 97 cents, surpassing the analyst forecast of 88 cents. John, what does this tell us about the company's performance?
This is a significant beat, with the actual EPS exceeding expectations by 9 cents. It reflects the company's strong operational performance and effective cost management. The fact that they outperformed the forecast from 4 analysts suggests robust financial health and strategic execution.
Operational efficiencies and future outlook. Moving on to operational aspects, Bank of Hawaii's non-interest income and expenses have shown some changes. Can you elaborate on these?
Sure. Non-interest income rose to $44.1 million, a 2.3% increase from the previous quarter, driven by reduced investment securities losses and higher insurance income. On the expense side, non-interest expenses increased to $110.5 million, mainly due to higher salaries and benefits. Despite these expenses, the company declared a stable dividend of 70 cents per share, reflecting confidence in their cash flow and future prospects.
Asset quality and balance sheet strength. Let's discuss the balance sheet. How is Bank of Hawaii managing its assets and capital?
The bank's total assets increased to $23.9 billion, with a strong Tier 1 capital ratio of 13.93%, well above regulatory requirements. Non-performing assets decreased to $17.5 million, indicating solid asset quality. These metrics highlight the bank's prudent risk management and capital adequacy, positioning them well for future growth.
CEO insights and strategic initiatives. Finally, what insights did the CEO provide about the company's strategic direction?
Peter Ho, the CEO, emphasized the strong start to 2025, with improvements in net interest income and margin. The bank saw a 7.3% increase in commercial loans and a 1.8% rise in total deposits, reflecting their strategic focus on optimizing the balance sheet and maintaining excellent credit quality.
Key takeaways. In summary, Bank of Hawaii has delivered a strong performance in Q1 2025 with significant earnings growth and strategic advancements. John, any final thoughts on their investment prospects?
Bank of Hawaii's robust financial results and strategic initiatives make it an attractive investment, especially with their strong capital position and consistent dividend payouts. Investors should keep an eye on their continued growth in loans and deposits.
Thank you, John, for your insights, and thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Bank of Hawaii's performance in the comments below.